Welcome to Growth TV, an ACG production. I'm Carolyn Vallejo, and today we're talking healthcare M&A with Jay Stine, partner with Forvis Mazars, and Bob Dunn, managing director of GF Data. Bob and Jay, welcome.
Thanks for having me, Carolyn.
Jay, let's start with you. Can you kick us off by telling us a little bit about some of the trends that you're seeing in healthcare M&A in these early months of 2025?
Yeah, no, happy to. And thanks for having me. So first and foremost, we saw what I would say some pretty good headlines at the end of 2024. Some big transactions got done that I think we were excited about 2025. In what we can kind of see thus far in just these first, call it 2 months, certainly not a big wave as maybe we had hoped, and a little bit more of the same. And, I'll call it probably a bright spot in what may be a longer recovery period, especially for healthcare services. And so as I do kind of dissect what we have been doing so far, there's always important to delineate a couple things. Healthcare services, it's still a little bit more of the same. A lot of add-on work is happening. I do think that we are in kind of the non-healthcare services piece. Pharma services, healthcare tech especially, continue to be kind of where new investments are looking to get made. And so I think we are still kind of seeing a bit more of the same from 2024. And as I've kind of talked with PE sponsors and what we're kind of already starting to work on, we are starting to see a little bit of pressure on some assets within healthcare services where maybe they just don't have the leverage to wait any longer. And so a bit of some pressure that we're going to have to kind of start a process here in 2025, I apologize.
Got it. Bob, you're a numbers guy. What does the data tell us about the healthcare services M&A environment right now?
Yeah, thanks, Carolyn. It's interesting. We're in the process of putting together our annual healthcare services report, and what we're seeing tracks pretty closely to what Jay was just telling us about on it. Overall, for healthcare services, and that's the only part of healthcare that we focus on in the report, deal volume was definitely down in 2024, and there was a migration, as with the broader market, to the smaller end of the market, particularly add-on investments and that sort of thing. So overall, we actually ended up seeing a drop in average purchase price multiple for healthcare service at the end of 2024, dropping to 7.7 times trailing 12-month EBITDA on average versus 8.9 times trailing 12-month EBITDA a year earlier. Now, the flip side of that, which is interesting on it, is within 3 of the 4 size tiers that we track in healthcare services, we actually saw increased valuations. But because there was such a movement lower on it, those smaller deals that are going at lower valuations had a bigger impact on it, and that kind of dragged the averages down. So not as bad of a story as it looks like, but I think Jay was spot on deal volume and also broadly within healthcare, possible migration to other areas besides healthcare services in what's still a tough environment. Other positive on it, we see debt access improving for healthcare services companies a little bit faster than the broader market on it. End of 2024, leverage total debt on healthcare services transactions averaged 4.3 times trailing 12-month EBITDA, compares to 3.7 times for the broader market of the deals that we track. So nice positive there. We also saw an increase in senior debt contribution, which mirrors the broader market, though a little more noticeable within healthcare services, and a decline in equity contribution on transactions by about 3 percentage points. That's interesting to me because generally these are very well equitized deals on it. So I think that drop points to possibly fairer conditions in 2025, though obviously there are a lot of headwinds out there. And I agree with Jay's point on the first quarter isn't necessarily ending up being what we expected it to be with higher deal volume across the board. And I think that applies to healthcare services also. So some positives, some negatives, but definitely following the broader market in terms of where the investment is going in 2024, or went rather.
Okay, there are some bright spots there. So as we look ahead, what are some of the biggest opportunities for investment in this sector that we should maybe keep an eye on? Jay, let's start with you on that one.
Yeah. So we get asked all the time, what sub-industries are we working on? Where can we stay ahead of things? Home care is one of those where I'd say we're seeing some strong volume there. It's has an environment that's probably just makes it a little bit more stable, and so I would just say we're kind of continuing to see that be a front runner compared to maybe some others. Um, Infusion is another space that I would say we've seen a lot of interest, a handful of deal volume. We're always going to be, dental is just so big that it's going to continue to be robust just from a volume perspective. But one thing that I'd say is just kind of maybe taking a step back in macro perspective is, 2021 was a banner year. It was a ton of healthcare services M&A. And so what we're starting to see, I think, a little bit is those businesses that have been able to successfully do add-ons and do them well, and from a volume perspective, I think they can afford to continue to wait and see for future. And so they have that leverage. I do think that there is stress on the system, though, and that we are starting to hold these for too long. We're not really moving the needle on them. And so I think we are going to see some activity for assets that more or less need to happen. They need to transact. And so what I think it's going to be fascinating is to see who are the winners and losers for in 2021. I think we're going to start seeing some of those results come out. And so, yeah, and I think dental is in a position where it's just had such robust volume over the last few years from an add-on perspective that those will be probably the front runners in terms of healthcare services to see who can actually kind of come out, show that we've been able to grow this successfully, continue. There's more green space out there to be for the next buyer. And so I think there's a good story there that'll happen. But those also can afford to wait because they've probably done better maybe than some of the others. So.
Mm-hmm. And Bob, anything to add there to close us out?
Yeah, I think Jay provided a great summary, and yeah, there's been a ton of activity, obviously, on the dental offices, medical practices. I think it's a very good point. Also, the amount of activity in 2021. If they have done the add-ons, and they're probably in a pretty good position, but obviously, what was paid in 2021 probably wasn't what would be paid in 2025, and there is pressure on there. I think average hold period for private equity, not just healthcare services, is up to 6 years. That's a long period of time, and that greatly impacts IRR and fund marketing. So I think there will be pressure there, as there will be in the broader market. But in terms of areas we're likely to see activity, I completely agree with what Jay said.
All right. Well, here's hoping for a stronger market so we can get some of these deals going. Jay and Bob, thank you so much for joining Growth TV.
Thanks for having me.
Thanks for having me.